Hey everybody, welcome to Brothers Automated Trading. Let's do a quick weekly update. I'm going to try to do these updates more often, but I'm going to try to keep them simple. I think that if you've seen my other videos prior, again, this is a swing trading strategy that we automate. We have it on live accounts of ours. It's a strategy through TradingView that you have access to. If you look in the description, you can see the details. You can actually do a test drive of this for 30 days. The important thing to know is this is a swing trading. Swing trading. This is not day trading. This strategy does not work on short time frames that we can find. This is not going to get you rich quick. This is a get rich over time. But it's also something that we use in an automated way so that we don't have to manually make these trades. It preserves our capital, and it really is the best way to preserve grow our money over time. We have these in our IRA accounts, in futures accounts, and of course non-retirement as well. They work on stocks, futures. You can put options on these too. But the point is, what I'm going to show you is this overview for this week. I'm trying to keep it simple, so let's get right into it. Also, this is not financial advice. This is for informational purposes only. What you're seeing here is the back test of the TQQQ. Works really well on the ETF over the last week. Here's July. Here's actually July 1st right here. And we had a really good trade. But July 2nd, we made, let's see what the return is. We made about 7%, a little over 7%. We had a couple, that was a little loss. But what's really important is since July 11th, we've been out of the market on Tesla on this. So that's part of the reason why we love it. And let's see, what's the drawdown? Since we've gotten out, we've protected about 13% of, 13%. And we love drawdown. I'm sorry, we love it when the market pulls back so that this strategy can get back in. This is a breakout strategy. It's a long only. This strategy does not go short because the bias over time is long. So again, here is the back test here, and let's go right into Tesla. Okay, so here's the back test on Tesla. And again, the green line, I should have said this earlier, the green line here is our strategy. And a lot of people will be confused by this. Let me just turn off that purple. The green is the strategy, and the blue is the buy and hold. So currently, the strategy is doing great, definitely beating the buy and hold. Tesla's been beat up a bit, but again, it's explosive, it has a good future. Let's look at the trades here. We had a really good trade on about June 28th. In fact, no, I'm sorry, about July 1st here, right there. And we had about a 27.6% gain. That was awesome. We got back in here, had a loss, back in, and a loss. This strategy works like that. It wins 30% of the time, and it only it loses 70% of the time. So you're getting hit on small hits, and then boom, there's something explosive, and then you make your gains. And we're going for big wins, and that is how we get these equity lines, the strategy equity lines like this, and that's our whole goal there. Now let's see here. We have, again, we want the market to pull back. We don't mind if Tesla pulls back. We want Tesla to pull back. Let's look at Nvidia. Long term, the buy and hold on Nvidia actually has been phenomenal. The only problem with the Nvidia buy and hold is we do not like the idea of holding anything with our strategies or just in general because of the potential pullback. And a lot of people are like, well, why don't you just buy and hold? Well, you know what? If we could have called it on Nvidia, that'd been great. But if Nvidia has an 80% drawdown, we don't want to be in there. Our strategies are producing 20 to 40% returns annually, and we like it that way. It preserves it really preserves our capital with minimal drawdowns. But here's the recent. Well, let's see here. Here's July. We actually had it in the end of June or mid-June. We had a great gain. Again, this is swing trading. 7% there, and that's about 7% as well. But we got in. We just happened to get out at the very top there. There was a limit order. But about 12%. Since then, the market's come down 12%, but we've been out. We've been out since we closed right at that last bar on the top, or close to the top. But anyway, let's see. That was, oh, okay, Apple. Okay, so Apple. Apple has been a really good. It's, Apple's days are still ahead of them as far as it'll grow, but with all the growth in the past, as you can see here, the strategy this is since the year 2000. The strategy's done well, but it hasn't beat the buy and hold. But the buy and hold has been volatile. It hasn't been exactly the easiest thing to hold. What we like doing is holding Apple as a part of TQQQ, Tesla, Nvidia, SOXL, Amazon, things like that. And again, you can apply this to stocks like that. But anyway, this is where it's been in the last couple weeks. We have, in July 1st, we had a really good trade right here. Go up about 6%, entered back in, small gain there, and it's been out since July 16th. Okay, that's where Apple is at. Amazon, let's look at Amazon. Okay, Amazon actually been doing well. Yeah, it's been kind of choppy here for July. It's been bought here, sold there for profit, got a break, a little loss there, a loss there, a loss there. So again, and then we've been right now the market's been down. We exited, but we're 8%. The market's come down 8%. So that was since July 10th. Okay. So let's look at SOXL. Again, this is the semiconductor ETF. It's triple leveraged. SOXL, we really like TQQQ and SOXL. All right, those two alone are just fantastic because you're not betting on one horse. Of course, because they're ETFs, they're triple leveraged, so they're explosive, but they also just hold the top. Yeah, in the SOXL, it holds the top ETFs or the stocks for semiconductors, and TQQQ is just the triple leveraged NASDAQ. And okay, so what you're going to see here is a great back test. That's wonderful, but let's see what it's been doing the last couple of weeks. Well, since July 1st, we've got in here, we had about an 8% gain. No, 15% gain there. A little loss there, and since July 11th, we've been out of the market on SOXL. Okay, so as you can see, the market, especially the NASDAQ and all these tech stocks, have really been coming down. The good news is that we're out of all of them. We're not in any trades right now on these. We got out, and that's the whole purpose, is to build this strategy so that we can get the heck out of these stocks and not have drawdowns. Now here's AMD. It's really a semiconductor play, but it works well in the strategy. And let's look at this. Okay, so here's AMD. We have July 2nd. We had it about 9.8% profit. We had another profit after that, a loss after that, and again since about July 15th, we've been out of the market. And this is good. Let's see, we have 16% drawdown, or if you were holding this stock, it's had a 16% drawdown since then. What you'll notice is that we're on a 10-minute on the AMD, 15-minute chart on the SOXL. Amazon's been 15-minute. Apple's at 15-minute. Let's see, 30-minute on Nvidia. So again, these charts take a while to develop. They're not super active, which is good. The swing trading is better at preserving that capital, waiting for those bigger movements so that we can take advantage of that momentum. Tesla's on a 15-minute, and TQQQ is also on a 15-minute. Okay, so this is the weekly update, and actually I went back a couple weeks, didn't I? And so I hope that helps. I'm going to try to do these updates more often on a weekly basis, maybe on a Friday, do a Friday wrap or something like that. Be sure to subscribe, comment, and like. And remember, there's that free trial for 30 days. You can test drive it. But remember, we don't want you to test drive it and think this is going to work on short time frames. It does not work on short time frames. I've tried it a million times. I've tried to find that holy grail of making a strategy that works scalping every day. I can't do it. I have I've focused on the swing trading, and that's what this strategy is for. It requires patience, absolute patience. And really, for growing accounts, for these strategies, you need at least $25,000. Is my suggestion. You do not want to be, trying to get this strategy and have, $5,000, $10,000 or less or something like that, and think that this is going to be a good fit for you. So I wanted you to keep that in mind, okay? But be sure to subscribe and comment if you have any questions. Thanks.